81,100 new jobs reported created in the month of August. That followed, of course, a drop of 24,200 in the month of July. So what are we to believe? Who better to ask? Benjamin Tal, Deputy Chief Economist at CIBC Capital Markets. So Benny, obviously these are notably kind of unreliable surveys, but this seems particularly unreliable that you could lose so many one month and gain so many the next. What do we make of it?
Exactly. It doesn't make any sense. And, we gain all of a sudden 20,000 new jobs in education during the summer. That doesn't make any sense. Regardless, listen, the labor market is fine. It's not booming. It's not 80,000 a year. It's not negative 20. It's something in between, more or less where we should be. However, it's not negative, and therefore the Bank of Canada is not thinking about moving in October. It's simply too early, and that's why the market is now shifting expectations to December. And why December? Because the Fed probably is going to ease, and as the Bank of Canada, you don't want to be on the sideline in this kind of situation. So again, the job market, fine, but not 80,000 by any stretch of the imagination.
So it's interesting, we have these remarks from Jay Powell today that, obviously U.S. investors will parse very closely. He's sort of saying, the days when a rate cut can revive an economy are maybe behind us. Do you think, given that fact that we may be headed for a slowdown, that there could be some shocks, right? We could still get a big trade shock that we haven't seen. There are certainly external shocks. Brexit's still out there. What else can the central banks do? What do they have in their back pocket if they did need to help economies, including Canada's?
Well, not much, quite frankly. Central bankers are becoming impotent in this way because, the effectiveness of monetary policy is going down with every cut in interest rates. And we're seeing it now with the Fed, clearly with the Bank of Canada. And that's why Trump has the green light to go with fiscal policy. So for the first time, we have monetary policy and fiscal policy moving in the same direction. Monetary policy is helping, but less because it's less effective. But ironically, fiscal policy is becoming more effective because private investment is not there, so public investment will not be stealing private investment, so that makes it more effective. So both of them are moving, fiscal policy more effective than monetary policy, but there will be enough, maybe, to prevent the U.S. economy from going into a recession.